The collapse of the Canada-US electric vehicle EV agreement has sent shockwaves through global markets and diplomatic circles. Once seen as a pillar of a North American green industrial revival, the deal unraveled overnight after newly elected U.S. President Donald Trump announced sweeping tariffs on key trade partners, including Canada. Ottawa's swift withdrawal wasn't just retaliation. It signaled a shift in priorities and exposed deep cracks in cross-border economic ties. For months, the EV deal had been hailed as rare cooperation amid rising protectionism. It promised an integrated supply chain, pairing Canada's mineral wealth and clean energy with U.S. technology and manufacturing. Billions were already flowing. Canadian lithium mines ramped up, and U.S. automakers rewrote contracts to favor Canadian inputs. That vision vanished as the Trump administration turned combative. The new tariffs hit not only China, but also Canada, Mexico, and the EU, upending years of economic partnership. While framed as protecting American jobs, the tariffs struck at the heart of North American integration. Canada, deeply tied to the U.S. economy, was blindsided. The EV sector, once a symbol of unity, became collateral damage. Within 2 days, Canada scrapped the agreement. The move was decisive and historic. Canada had never before walked away from a joint industrial plan of this scale. It was a clear rebuke of Trump's protectionism and a declaration of economic independence. The fallout is massive. U.S. automakers that restructured supply chains around Canadian rare earths now face major disruptions. Production timelines are in chaos, contracts are under review, and contingency plans are scrambling to keep up. In a sector that demands stability, the sudden split is disastrous. Canada is pivoting fast. Officials say they'll court new partners, likely Europe and Asia, redrawing global EV supply chains and diverting investment away from North America. Canadian firms, built around U.S. standards, now face the costly task of adapting to new markets. It won't be easy, but Canada no longer sees the U.S. as a reliable green energy partner. The geopolitical implications are stark. At a time when climate change demands cooperation, two of the world's closest allies are at odds. If a shared commitment to clean technology couldn't survive one election, what does that mean for other agreements? Once trust erodes, it's hard to rebuild. Reactions at home are mixed. Trump's base cheers the tariffs as job protection, while critics warn they could backfire and hurt the workers they claim to help. In Canada, the response is more unified. Many see the split as a stand for economic sovereignty after what's seen as a betrayal. Behind the scenes, global companies are scrambling. Automakers, battery makers, and miners once counted on a stable North American EV plan. Now they're rethinking investments and production sites, with some shifting capital to regions with steadier policies. This goes beyond EVs. The split casts doubt on other cross-border industries too, especially clean tech and critical minerals. Canada's message is blunt. It won't tolerate economic threats, even from its closest ally. While popular at home, this stance adds uncertainty for investors. Politically, the fallout is just starting. The tariffs show no ally is safe from U.S. economic nationalism. If Canada can be targeted, others wonder who's next. Ottawa's pushback may inspire more countries to resist U.S. trade pressure, straining alliances once seen as unbreakable. This split could complicate climate goals that rely on joint supply chains. The timing couldn't be worse. Decarbonizing economies needs cross-border cooperation. Breaking these links risks stalling momentum. Both countries have strengths in clean tech and raw materials, but now thousands of workers face uncertainty, from miners in Ontario to engineers in Michigan. Factories expanded, workers trained, infrastructure upgraded, only for the vision to evaporate. Rebuilding trust won't be easy. Canada is moving fast to adapt. Officials are drafting plans to grow the domestic EV industry without U.S. help. There's talk of deeper ties with the EU, South Korea, and Japan, plus new investment in homegrown battery tech. Whether they can fully replace the lost partnership is unclear. In Washington, officials seem undeterred. The U.S. plans to push ahead with electrification using domestic resources and new partners. But America lacks enough key minerals to scale up fast. Replacing Canadian supply will be tough, risking shortages and higher costs that undercut the tariff's purpose. Markets are jittery. Prices for lithium, cobalt, and nickel are swinging as supply fears grow. EV stocks are down on worries about delays and higher costs. With China and the EU racing ahead, North America risks falling behind. Trust in trade deals is taking a hit. If a big agreement between close allies can collapse overnight, what hope is there for bigger global deals? The message is clear. Politics can override planning, and deals are only as secure as the next election. Canada's move is defensive but strategic. It aims to build economic resilience in a volatile world, but it's a blow to hopes for a more integrated North America. The goal now is to forge new partnerships and tougher agreements. For the U.S., the real cost is still emerging. Leading the EV race will be harder without cross-border supply chains. Domestic output can't fully fill the gap, and new partners take time to secure. The world is watching as the U.S. tests a go-it-alone approach built on confrontation, not cooperation. The shockwaves go far beyond factories. Ottawa is preparing a WTO case, arguing the tariffs violate trade rules. A Canadian win could limit future U.S. tariffs. Investors expect a long legal fight. Canada's bond spreads are widening over fears of lost exports and retaliation, while U.S. municipal bonds in EV regions are seeing unusual trading as funds brace for closures and layoffs. Hedge funds are betting on raw materials. Options for lithium and nickel are surging as traders speculate on new supply deals shifting to Asia or Europe. Behind the scramble is a bigger plan. Canada is lining up new mineral sources, cobalt from Nordic countries, lithium from South America, recycling tech from Australia, to cut dependence on any single partner. The U.S. is pushing domestic mining and faster permits, but says replacing Canadian output could take years. Tariff exemptions may be offered to lure Canadian producers back. Universities are turning this into a case study. Early research warns global EV adoption could slow if new sourcing delays production. Companies are funding studies to map supply chain risks. On the ground, regions are adapting fast. Manitoba is in talks with German firms for a solid-state battery hub, a model other provinces may follow. Polls show rising Canadian support for economic sovereignty over cross-border integration. In key U.S. swing states, buyers worry about fewer EV models and longer wait times. Environmental groups warn the rift could stall decarbonization. One study says lost North American EV output could add millions of metric tons of emissions over the next decade. Climate summits are now debating how to protect green tech cooperation from trade fights. Security experts see risks too. Pentagon memos reportedly flagged the weakened U.S.-Canada link as a threat to military readiness, especially for electric vehicles. Some defense contractors are already looking for backup suppliers. Boardrooms are rewriting supply chain playbooks. Companies want no single supplier or country to hold more than 20% of key inputs. This raises costs, but ensures against future shocks. Investors now demand clearer supply chain risk disclosures. Media coverage has amplified every twist. What started as a tariff dispute is now a lesson on how fragile globalization can be. Some argue open borders can't guarantee stability, and local resilience must be stronger. Meanwhile, clean tech money is shifting. Venture capital is flowing to Southeast Asia and Northern Europe, seen as more stable. Some Canadian startups now plan battery plants in Germany or Japan instead of Ontario or Quebec. Communities in Canada's mineral-rich north are worried too. Regions counting on the EV boom face new uncertainty. Governments are drafting policies to attract investment with better royalties and indigenous-led equity models. Consumer watchdogs are on alert. If automakers switch to pricier suppliers, costs could hit buyers. Regulators stand ready to fight price hikes, but risk chilling competition if they overreach. G7 environment ministers have added the dispute to their agenda. Drafts hint at new clauses to keep climate cooperation off limits during trade fights. Entrepreneurs are testing workarounds. Blockchain tools are being piloted to track battery minerals from mine to factory, using smart contracts to build trust without bilateral deals. The cultural sector is weighing in too. Documentaries, podcasts, and graphic novels are telling the human stories behind the headlines, exploring the tension between economic nationalism and global cooperation. The collapse didn't just disrupt business, it forced a rethink. Governments, companies, and communities are adapting. A new global order is taking shape. Resilience alongside efficiency, sovereignty alongside interdependence. This debate will echo for years to come. This was just the beginning. Hit that subscribe button and buckle up. Digital Garage has so much more in store.